I'm Darwin Green, VP Exploration for Constantine Metal Resources, and I'm going to be talking to you today about our high-grade polymetallic deposit in Alaska and Constantine. There we go. A quick snapshot of the company. We've got a very strong technical and management team. A lot of experience exploring for the types of deposits we're looking for and securing good deals with good partners. We've got a tight share structure with 44 million shares outstanding. We've got cash in the bank. We've got very significant project endorsement on our principal asset, and that's with Dowa Metals and Mining. They operate Japan's largest zinc smelter. They have a 49% interest in the project by way of a earn-in agreement, option earn-in. They spent US $22 million to earn that 49%. They happen to operate Japan's largest zinc smelter and have been mining these types of deposits for plus 100 years. As far as equity goes, we've got a great roster of quality shareholders, very tightly held company in terms of stock. News flow, we've got quite a bit of news in the near term with drill results from the summer's drilling, updated resource, ultimately all leading towards a PEA plan for the end of this year or early next. And I guess to capture the investment opportunity here, we've got an asset where we think there's a fundamental value which mitigates your downside risk. We've got a lot of exploration upside, and there's also the added value of a spin-out of our gold assets that I'll talk to you here in a bit.
You have a royalty agreement with Alchemist?
No, we do not. They're just an investor. Mm-hmm. So our assets are in North America. Palmer project is in southeast Alaska. It's coastal southeast Alaska, very accessible. And then gold assets in the Timmins Camp in Ontario, and a very new acquisition we picked up in Alaska called the Johnson Tract project. Those gold assets, we're going to bundle them together and spin out into a new co and keep Constantine focused on our copper zinc project, which is reaching critical mass. Alaska, it's really about where you are as much as anything. It's got an incredible mineral endowment, but it doesn't have a great infrastructure endowment. We are very fortunate that our principal asset's sitting overlooking a paved highway that's 40 miles to a deep sea port. In this photo, the guy on the left is standing basically on top of the deposit, and you can see the road access coming into the project area. And the real dual theme of this project is we've got a main deposit area that's reaching critical mass. We're getting the updated resource and initiating economic study on that deposit. And but really it's a multi-deposit district scale property, which is common in these types of deposits. If you find one, you find more. And we proved that last year with the discovery of a new deposit called the AG zone, which we're expanding right now, and we think there's more to be found. So our game plan this year, it's really been driving towards establishing that value in the asset. When we say high quality, really we mean high margin. The way for us to demonstrate that is through a PEA. And to reach that point, we've been doing additional metallurgical work, updating our resource, more drilling, and to gear us up for this PEA, which has been started and is due for completion near the end of the year and into the new year. So this is the resource. This came out last week. It was an update. So when Dowa came into the deal, we had a resource of about 4 million tons. We expanded that to 8. Now we're up to 10. Equally important to us was the ability to convert almost half of that to indicated. But what I really want you to take away from here is, I guess, is the grade equivalent. It's a high-value deposit. We've got zinc and copper that are kind of in sub-equal value with the current metal prices right now. Zinc is leading the charge. It probably carries about 65% of the value of the asset. Go back 2 years, it was copper that was carrying that value. But it's a high-value deposit, and one of the things out there, particularly in the zinc space, is a real lack of quality assets. There's a lot of zinc assets that have been around, sitting on the shelf for the last few decades. It's very few sort of new stories, and those that are seem to command a premium. Arizona Mining being probably your best example. And so, as I say, on a unit value basis, we're $1.8 billion. I think they were taken out for. That's right. On a unit value basis, we see us as a higher unit value deposit for one of these undeveloped deposits, and we expect lower mine costs. The PEA is out there to prove that, and I'm going to walk you through why we think that's the case, because margin is the difference in these projects. So terrain, it's actually a major advantage for our asset. We're looking at what would be an underground mine, and when you can access your deposit from the bottom and mine up, it's a huge advantage. You can have an ore pass to drop your ore down, reduce your operating costs, and from a development cost scenario, short lateral access and you're into your ore to start mining right off the hop. Mother Nature's been kind to us in terms of the other prospect areas are kind of condensed in a tight area where you can laterally reach out to multiple deposits from one common portal for development. The deposit is wide. We've got big, thick, wide zones. It's steeply dipping. It's amenable to long hole stoping and lower cost mining, and we're just a stone's throw from the port and the Asian smelting markets. So this is about 40 miles door to door from the project area. It's really just to highlight that deep tidewater for ocean-going freighters, existing port infrastructure, state highway. This is the kind of infrastructure people don't think of when they think of Alaska, but it is the case for us. We're probably a shorter distance to the coast and to the Asian smelting markets than almost any other base metal project in North America. Looking at the project itself here, this is a road we just completed this last stretch of it this summer, and we're looking at an exploration portal to take this to the next phase, allow us underground drilling to upgrade the deeper parts of our deposit. And you can also see the proximity to the other resources in the area. Lots of room sort of down the road from this for mill and tailings and all those other facilities. Looking to, the ultimate opportunity here, like our strategy right now is to say, okay, we've reached critical mass, this is going to work. But it's not the end of the story. We can maybe have a 10 to 15-year mine life with what we've got. We see this as a multi-decade opportunity, and that's in the other deposits. We've made the second discovery last year at the AG zone, just 3 kilometers from our main deposit. We're going to get a maiden resource out on that in a couple of months here when we get our 2018 drill results in. But that's just the tip of the iceberg. There are many more prospects that are very high-quality prospects. This was the first drill hole put into that AG zone. There's mineralization sticking out at surface, never before been drilled. We put a hole into it. Now we're drilling 20, 40-meter intersections of 10% plus zinc equivalent, just building tons fast. It's a real opportunity here to build a camp over time. Just an example of that, some of our drill results from the summer, 40-odd meters of massive sulfide, 28 meters of 140 grams silver, shy of a gram gold, and 9% zinc, 3.5% lead. You build tons fast in these types of environments with such dense rock. With the minute or so here to go, I'll just briefly touch on our gold assets. We've always had a good portfolio of gold assets in the Timmins camp, very high grade, much like what you've heard out of Australia lately, sort of the 20, 30% gold type numbers. It's really neat stuff, but we've been starved of capital to get after it. More recently this summer, we just acquired a new prospect called the Johnson, again in a coastal accessible area of Alaska. It's been off the market for 25 years. It's held by a native corporation. They came to us. We've got a great deal there. We're very excited about these. We're going to bundle them up and launch them out into a new company focused on advancing these guys. So just briefly on Johnson, it's a bit unusual. It's a zinc-rich gold system as well as other base metals. So it's kind of like a hybrid between a VMS and an epithermal in a way. It's a really quite unusual deposit, not only in its geology, but also in its grades. Just for example here, the last time it was worked was in 1993. As I say, it's been off the market for, 25 years, and, multiple 50 to 100 meter intersections of 10 grams gold and 5 to 10% zinc. Unusual, great grade, and a great opportunity. It was taken to a PFS level study in the past, internal by a mid-tier gold producer, and then they got bought out by a Swedish company, and it got mothballed. So we're excited about moving this forward. Thank you.